Good morning, everyone. Just admitting a couple more people that are just waiting in the lobby. So we'll just give it sort of 30 seconds or so. Here we go.
It's afternoon now, Charlotte.
Yeah, what is actually 12:01. So good morning, everyone. Welcome to the Haslers webinar today on preparing for your statutory audit. So today's presentation is going to be delivered by the Haslers audit partner, Pambos Patsalidis. So before I pass over to Pambos, just a few sort of housekeeping rules. So if you wouldn't mind keeping yourself muted throughout, that would be great, just to stop with any interference. We are also recording today's session, so after it's finished, we'll send you a link to the recording just in case you want to rewatch or revert to anything. So if you do have any questions going throughout, Pambos is happy to take those. So you can either raise your hand or just pop it in the chat function, and then I will interrupt Pambos and either read out the question, or we will I'll let him know that you've raised your hand, and then you can unmute yourself. There will be a questions section at the end, but as I say, if you do have any questions throughout, please feel free to pop them in the chat. So I'll pass you over to Pambos now. So we hope you enjoy the presentation and you find it useful.
Thank you very much, Charlotte. Welcome, everyone. So I'm assuming that people interested in preparing for their statutory audit are members of a finance team or owners of a business that requires an audit, or perhaps owners of a business that's looking at future years that will require an audit, and perhaps you just want to go through a bit of pain. I mean, you know, that's how audit is seen. But let's have a look. What I've done is I've structured this in a way so that I can give you some background. I think it's always good to have some background before launching into some of the detail. So I'm going to talk about the audit. Why do we have audits? Some of the negatives, probably quite a few negatives, and some of the positives, because I think there are a few. How you and us as auditors can make the process more comfortable. And then I'll talk about the preparation process, so the preparing for an audit. And I'm looking at it from a real practical perspective. I've been an auditor myself really since I started training, which is in the late 80s. So I've gone through various phases of the audit process over the years, and it has certainly transformed over the years. And so hopefully I'll be able to pass some of that knowledge on in the way that I deliver this. So the audit. Why do we have an audit? Well, that's an interesting question, because really the reason why we have an audit is because we've had the benefit of limited liability protection in this country, which was something that was started last century, if not earlier, in order to encourage commerce. So rather than you risking your personal assets to go into business, the limited liability, the veil of incorporation concept was introduced, which enables you to be the owner of the business, to be a separate legal entity to the business itself. So if the business goes wrong, you don't lose all your assets. Now, the trade-off of the limited liability concept, there's a few, but one is the fact that you have to present and file accounts at Companies House every year, if not more regularly, depending on your periods. And initially, I believe the audit was a necessity probably for all companies submitting accounts. But when I started in my career, anything over a turnover of £1 million had to have an audit. Those thresholds have now moved on. You have to, if you don't breach two of the thresholds, more than two of the thresholds, turnover, I think it's 10.2 million, asset value 5.1 million, employees over 50. You don't need an audit. You don't have to submit audited accounts. You still have to submit accounts, but they don't need to be audited. There are also some exceptions to that rule. Some public interest entities have to submit audit reports, and also, I don't know if any of you are aware, but if you're a business that has different shareholders, a shareholder with at least 10% of the shares of the business can demand an audit. They have to go through a certain process and submit certain paperwork, but a shareholder with just over 10% of the business can demand an audit, even though the legislation may not require it. And you can see why, in some circumstances, that may be acted upon. And who benefits from an audit? So, as I said, you have the benefit of the veil of incorporation, limited liability. And so if people want to trade with your business, they perhaps want to have a look and see how you've done historically. Are you solvent? Are you insolvent? What's the size of your business? But the users vary. And shareholders, customers, suppliers, they're all interested. The government, obviously, the tax authorities are interested. Staff may be interested, competitors, investors, lending institutions. There's a large list of users, and having an audit certificate on your accounts gives you a certain amount of credibility. It means that those figures have been independently verified, and there's an opinion on those accounts regarding the truth and fairness of those financial statements. So what are the negatives? There's loads of negatives. Over my career, I've heard them all. We're looking at historical information. It's intrusive. It's obviously costly. It's something that the owners may not want. It takes a bit of time to prepare. There's opportunity costs. Rather than preparing for the audit, you could be doing something that earns you money. So why do I have to go through this process? And there's a cost of non-compliance too. There's late filing penalties. Your credit ratings could suffer, and so these are all seen as negatives. But trust me, there are some positives. As I mentioned, having an audit report, and as I said, some people actually volunteer to have one done, even though they are below the thresholds. It gives their business certain credibility. The financial statements have been independently verified. It's an independent review. You may want a critique of your internal systems, and it provides that. It provides you some insight into your accounting function. If you're running the business, if you own the business and you're not part of that accounting function, having someone independent look at your accounting function may give you some insight. As auditors, we try and identify weaknesses in systems. We then communicate that in terms of the consequences of those weaknesses, and we provide some recommendations. So these are all positives, and it's an opportunity for the business owners, the finance teams, to ask other professionals that see businesses every day of their lives some questions, their opinions about different policies, different treatments. So there are certainly a number of positives, and we shouldn't overlook those. So, how can you make this whole process more comfortable? It's very intrusive. So my recommendation is to ensure you have the right auditors for the job. And what do you need to consider? Because there's loads of audit firms out there, or there's loads of accountancy firms out there that don't all do audit, because audit is quite a specialist area. It's an area where you have to have volume to make it work as an accountancy practice. And so, take that into consideration. Who is the firm that you're using? Do you want a robust audit? Do you want them to come in and question things? Do they have expertise in your area of business? Can they provide other services? Because especially if you're not listed and you don't have to have an auditor that's independent to any other financial services that are being delivered by the firm, can they provide good corporate tax advice, personal tax advice? Do they have other services that will assist you as a business going forward? And look at the people, their attitude. Are they similar people to you? You're buying people at the end of the day when you're hiring an audit firm to do your audit. Perhaps the location is important, especially if, I know that since the pandemic, we've done a lot of audit work remotely, but location can be important. Can they pop in and see you? Can the stop date be arranged easily? Is it convenient for both parties geographically? And so consider those things, because if you're struggling, then look at that aspect in terms of making the whole process more comfortable and helpful for you as a business, and your team internally. I think this aspect is overlooked sometimes. How financially savvy are they? Do some of your team have audit experience? If they're qualified accountants, they may well have qualified at an audit practice and they have an experience of the audit process. How can that be helpful to you in preparing for the audit? Consider these things, because that would, if you can tap into that resource and that expertise, there may be junior members of the team, but they may have that expertise and they may be able to help you. What we found as auditors, that a defensive and not a receptive attitude from the finance team makes things harder for everyone. So consider these aspects and it will make the whole process much more comfortable for you. So the actual process itself. So as I said, I wanted to make this as practical as possible, and I'm using my years of experience and the feedback I get from staff, audit staff, to be able to come up with these points. I've got 5 bullet points here, which I'll expand on, and I'll talk about things that you can do over the year that will assist the process, the importance of a timeline. If your auditors don't demand this, you should. How important it is to be upfront about potential issues that have been identified. Don't leave them to the end. The whole process of the information requests and the sharing of information, that's very important. And generally just effective communication. So I'll expand on these points. So stuff to do as the year unfolds. And the reason why I've come up with this slide is because, we're all busy, we're all working very hard. It's very difficult sometimes to look back and think, oh, when did that happen? Was that part of the financial year that the auditors are looking at? It's so easy to lose track, because day upon day piles upon each other, and then you may be having the audit done 3 months into the new financial year. The whole thing becomes one grey mess. So my recommendation is to keep an audit file, your own audit file, label it up, a physical file, a folder, or maybe something on Excel or something on the system with which covers the period that's going to be audited next. Keep an audit file and make notes throughout the year, things that are going to happen that you think, the auditors might be interested in that. That's a key event. There's been some staff changes. We've changed some suppliers. We've had an issue with a customer. There was a discussion about changing an accounting policy. I think make a note of this in the file, date it. That will be invaluable information when the auditors are there. You don't necessarily have to give them that file, but have it yourself, because I think it then sets the timeline for the period that they're looking at, and it will help you immensely when you're being asked questions, especially at the planning stage. The other thing to do, obviously, this depends on the size of your internal finance function, is to clarify responsibilities internally. Do you have someone that deals with the purchase ledger? Do you have someone that deals with the sales ledger? Is there someone that looks after the fixed asset register? So clarify who they are and the fact that they will be talking to the auditors regarding those functions. I think that's key. Okay. Any new systems, changes to systems, again, this is something that should go in your audit file, but very key and needs to be highlighted very early on to the audit team so that they're aware. You don't want them spending hours and hours on something to then subsequently realise that you've changed your systems. So these are things to do as your year unfolds. Okay. So I mentioned the timeline. So your auditors, depending on the size of your business and whether they come in for an interim audit pre-year end, or the audit normally takes place totally after the year end, there's normally an audit planning meeting. And that's a very, very important meeting. It really feeds into the audit process. And it's at that point that as much communication as possible should be passed over to the auditors to enable them to focus their work. So real key to the preparation of an audit is to attend that meeting and be engaged in that meeting. Mention the stuff that you said. Sorry. That was a mistake. So yeah, very, very important to be engaged in that audit planning process with the auditors. They'll ask loads of questions. If you don't have the answers straight away, go back to them. But it really helps their audit planning and the work that they intend to do. And take note that you will require time to prepare for the audit. So if the audit planning meeting if at that point you're starting to discuss the timeline, don't be optimistic, be pessimistic. Give yourselves time. Give yourselves time to prepare. There's nothing worse than a team arriving on audit and the client isn't ready, hasn't been able to prepare their year end. So give yourself sufficient time, and you'll collaborate with the auditors, align expectations and timelines with them. Be realistic about that. Could save a lot of time further down the line if you're realistic about what they should expect and when to expect it. And be conscious that, especially if you're reliant on other members of the business that aren't at that audit planning meeting to supply information, or other stakeholders, communicate the plan to them so that there's no surprises. But definitely agree a timeline. Very important. So this slide, be upfront about potential issues. Listen, I've not been on the receiving end of an audit as such, although as an accountancy practice, as an audit practice, our regulators come and review our files. And so I know what it's like to have someone troll through your work. But be upfront about potential issues. If they're major issues, they'll come up. And so you're better off showing that you have an understanding, providing information up front. So, I mean, understand what constitutes a potential issue. So a major event during the year, perhaps you're looking at a particular bad debt. You know that there's been issues regarding the recovery of a sales invoice, and you're only 1 month into the new year end, but you know that is going to be a problem. Mention that early on. It's only going to be uncovered. If there's been any legal issues, mention them. The quicker that the auditors can grapple with complex issues where decisions have to be made, the quicker the timelines will be met. Mention anything unusual. It may be that it's not important to the audit, but mention it. you're better off bringing it out into the open and discussing it. At that point, if there is a problem, if there's an issue that needs to be addressed, discuss the evidence or the information that the auditor may require to enable the auditor to make a decision as to how that's going to be presented, what additional information they require to make a decision. And it's not too early to discuss the consequences. It's good for you to know what it means. If it goes this way, what impact will that have? It may galvanize you into dealing with the situation. So, for instance, if it is, for instance, a bad debt, and you know that the auditors may end up wanting a provision against that, well, it may mean that you get your credit control team to work hard on that bad debt so that you can get the money in so that it isn't provided against, so forth. So you're giving yourself the time to be able to react or to obtain the information that's necessary. You may need a valuation done of a property, for instance. So these are the sort of things that the earlier you bring them up, the better it is for the audit process. So discuss this with your auditor, discuss the consequences, understand the impact, enable yourselves to make timely and informed decisions. So this is an area that I think is becoming more and more important: information request and sharing, especially with remote audits, the tight deadlines, busy lifestyles that we all have, getting information over as quickly as possible, getting your house in order, ensuring availability of key documents, etc. How is that going to be done? I know that at Haslers we offer a portal, a secure portal, where you can upload information. We can easily access it. But some clients have their own systems, and they ask us to access files that they've securely located somewhere. Again, organize this quickly. Very important. Set deadlines to access. So if you know that the audit is ending in September, cut access to those portals at that time. Don't allow this information to sit in the cloud for someone else to access. So cut access to it. But be mindful regarding the security of the transfer of information. But also consider not only the information that you're being asked for, but you may have some real gems of information that perhaps the auditors have not asked you for. They didn't realise you were organised enough to have them. But there's new regulations that have come in which require auditors to have a very good look at systems and to test systems. And so if you already have systems notes internally, if you have your own document flow charts or organizational charts, your auditor will welcome that information. It would save a lot of time and potentially reduce your audit costs. So so if you have information like that, if you can keep it up to date and provide it, that'd be phenomenally good. I'm sure you'll be there'll be a big pat on the back if that's provided. Generally, though, effective communication is the backbone of the audit. So maintaining open and transparent communication with the auditors is key. And it goes both ways. The auditors should respond quickly, but likewise, if responses are even holding emails are sent to say, received your email, I know the information you require, we're on to it, we'll try and get this to you as quickly as possible, helps the auditor plan their work. And there will be queries that arise, and you may have a system where the queries are all maybe communicated at the end of the day, but addressing those queries or requests as promptly and accurately as possible is obviously a no-brainer. I heard something again. And facilitating access to the required information and the necessary personnel. there's nothing worse than being told, oh yeah, we've got an in-house legal team. Didn't we tell you? Or you could ask them. And we find this out maybe 3 months into the audit, when we've been asking questions and getting, it's like Chinese whispers. You get information coming through from the finance team. We could have been talking directly to the legal expert to get an opinion on some provision that's been made. So collaboration to resolve potential issues, very important. And so stay open to that. Ensure you show a willingness to communicate. It really helps the team.
Question in the group chat. Would you like to take it at the end, or do you want me to read it out now?
Oh no, read it out now. That's fine. Yeah.
Okay. So it basically says, if we haven't realised these rules or regulations of ISO, what will happen?
I don't understand the question. Could someone, whoever sent the question, just elaborate?
Wawan.
Arwan, can you unmute yourself and just clarify what you're asking? All right, I'll guess. So can you repeat it again, Charlotte?
Yes. If we haven't realised these rules or regulations of ISO, what will happen?
Of ISO. I'm not entirely sure. Maybe.
I mean, perhaps if you continue, I'll put in the chat if they could elaborate and raise their hand, and then we can take that at the end if you like.
I'll take the question. I think if what they're saying is if they haven't realised that there's been some new regulations regarding the new ISAs, which are requiring auditors to spend a lot more time on systems work. But if you haven't realised that, it's not really something that you need to necessarily concern yourself about, because the auditors will deal with that aspect. So they will spend a certain amount of their audit time documenting systems and testing systems. It may mean that they need to organise some time with you to understand the systems. So that's something that the auditor will take in their stride. Obviously, the consequence is potentially an additional audit cost, but it's not something that you necessarily, as the client, need to prepare for. If you've got systems notes, if you need to update them, that will help the process. But that's basically it from your perspective. The rest the auditor will do. Okay. Any other questions coming through, Charlotte?
No, that's it for now. Thank you. I have put in the group chat if they want to raise their hand and ask everything further, then to do so. So I think if we continue, and then if anyone else has any questions, they can pop it in.
All right. Well, I mean,
chat.
we've neared the end here. So
okay.
So my last slide here is really just to conclude some of the key points. Establishing a timeline and a plan with the auditors, very important. Open communication. So a list of those responsible for the different areas, so the auditors can have a line of communication with them. Internally, if you are a large finance function, again, who's responsible for what, make sure that's communicated through. There will be an information request from the auditors that will have to be downloaded, uploaded rather, and the information will be available. Give yourselves time to prepare that. Don't put yourselves under too much pressure. Obviously, there are deadlines to consider, but that's a very important aspect. If you do that well, and there's a complete set of information that completely fulfills the information request at the beginning of the audit, it makes things run much smoother. And be responsive. Embrace the process. There can be loads of positives that come out of it, and the attitude flows through to the audit team. The audit team is conscious of how responsive and how much the client embraces the whole process, and it makes things run a lot smoother. And as I said in my slide, finally, the auditor will make sure that there is a management letter, as we call it, at the end of the audit process, not just an audit report. So have a look at that, discuss the points with the auditor, discuss practical solutions to the points that the auditor has raised. And that feeds into the next year's audit process. So they're all interlinked. So being able to respond to that management letter, to be able to demonstrate the points have been, the points raised have been, and the recommendations have been applied, will help the following year. Okay, well, at this point, I'm happy to take any questions. If anyone wants to put their hand up or speak up. No?
There was that awkward silence, isn't it, at the
Yes,
end? Yeah. We haven't had any further questions in the chat.
Okay.
So I think we will, as I say, we have recorded this and we will send the recording to everyone that attended. And if you do have any questions, by all means, please just respond to the email and then I can pass it on to Pambos or a member of our team. So I think that concludes today's webinar. So thank you very much, Pambos, and that was really interesting. And we hope you'll have a lovely day.
Okay. All right.
Thank you.
Very much.
Thanks a lot.
Thank
Bye.
you.
Bye.